Hey, welcome everybody to How to Adequately Protect Your Roofing Business with Insurance. I'm John Kenney, and I'm here with my good friend and cohort worker here, Jeremy Power. How are you today, Jeremy?
I'm well, just melting away in Toronto, though you're in Florida, so I won't complain too much.
Yeah, I know it's hot up there for what you normally get, so I completely understand.
Yeah, it's not bad, and hopefully it breaks soon, but it is what it is. I won't complain. We have a long winter ahead of us, unlike you guys.
Well, I know we
Uh,
got a hot topic here today, so I'm going to go ahead and turn this over to you, Jeremy. Why don't you get us started here and let's get going.
all right, so welcome everybody. So this is the second webinar John and I have done for you guys, and happy to be back. Um, Today's topic is insurance and how to protect your roofing business with the right types of insurance. And some of you may have noticed I've written a lot about this lately, but we thought, we'd talk about it in person and maybe take some questions at the end. Anyway, everyone knows insurance is not, the flashiest of topics, but it can cost you money if you're underinsured. So with that, we'll get started. Um, Basically, being underinsured can cause a lot of problems. If you have a big mishap on a project and things go, really south, then you can end up paying out of pocket personally if you're not incorporated. Your company can be down money. Your reputation can suffer, and basically it can just be detrimental to your business. It just looks bad if you're underinsured to start with, and the problems just snowball from there. So with that, we're going to go over the most common types of insurance that a roofing professional should have. The first one is property insurance. So basically, when there's an existing structure, which as a roofer, most people, that's what you'd be working on, especially residential, you definitely need property insurance. If your contract doesn't have it in there, then that's a problem, and you should, get it anyway. Basically, that will cover loss or damage to the owner's property done by a third party, i.e., you working on the property. So it covers direct physical loss, injury, or damage to the property, but not loss of use alone. With property insurance, you can have what's called an all risks coverage or named risks. Sometimes it says perils, but really that just means risks. The latter policy, named perils, would cover certain specific things. Like if you were in the roofing context, if you used certain shingles that caused, that melted away, say you are in Florida or somewhere hot, Toronto in the summer, your insurance policy might say if these shingles, end up causing some other problem in the roof, you're covered. Just as an example, I'm the lawyer here. John might be able to weigh in more clearly on actual details of roofing, but that's just an example. However, you should be aware of when you are signing up for an all risks or all perils policy, because there are still some exclusions that you need to be aware of. They may not cover damage that could be covered by a named perils policy. And that may sound counterintuitive, but you always need to read the exclusions in your policy, especially when you're signing up for property insurance that says it is all perils covered or all risk covered. The main takeaway from property insurance is that these policies cover damage that comes in the regular course of construction, but neither really cover for faulty or improper workmanship. It's never intended to be a warranty of the products you're using. So to better use the example I was talking about earlier with the shingles. If the shingles are the right ones, but you install them improperly and they melt or something like that happens, that won't be covered. It would be covered if you installed it correctly and there was a problem, but not if you installed it incorrectly. And that's basically what you need to know about property insurance. And we'll talk about it a little bit later in the presentation when we discuss subrogation. So the next one that we should discuss is builder's risk insurance. As you can see in the slide, it's intended to cover loss or damage suffered during the construction process as to provide the owner the funds to rebuild in case of a loss. It's the broadest of the standard insurance coverage you can get in Canada. And it usually provides protection for property during construction, installation, and reconstruction or repair owned by the insured or others. So this would cover temporary structures such as scaffolding, site preparations, and the hoarding necessary to complete the project. Now, of course, as with any other policy, there are limitations placed on this type of coverage. Insurers will always strictly rely on the wording of the policy. So owners and contractors should take care to negotiate additional protection if it's required. So insurance, builder's risk insurance will typically cover all risks of direct physical loss or damage subject to any exclusions in the agreement. Although it usually will be obvious if there has been any physical loss or physical damage, less tangible losses arising will likely not be covered. The wording of these clauses, therefore, is extremely important. Parties should consider whether changes to the language make sense for the project before formally entering into the insuring agreement. The term of coverage for builder's risk insurance usually begins when the property falls under the control of the insured, i.e. the contractor, and ends when all or part of the project is occupied. Now, this is important. The CCDC documents have changed their guidance on this a little bit, which again, we'll talk about later in the presentation. But for now, this is, if you're not using CCDC documents, then this type of insurance would still cover when it's occupied. So, continuing. It also ends if the site is unattended, so therefore security is very important to have, or construction has ceased for 30 consecutive days. These restrictions may not suit all projects, and care must be taken to anticipate possible coverage needs if there were to be any delays in substantial completion to ensure adequate coverage. So there are also some basic exclusions to this kind of coverage. As we've discussed above, there's always exclusions. A standard builder's risk policy contains a number of exclusions that contractors must address in order to avoid problems. These include, but are not limited to, materials in transit, flood damage, faulty workmanship, again, and faulty design. So there's 4. Now again, that's not all of them, that's just the 4 main ones. So again, always read your insurance documents. It's a contract like any other, and you can be sure that the insurance company knows those documents in and out. Sorry, my air conditioning's broken and I'm sweating a little here, but
you look good, Jeremy. It's all right. You're in the hot north. Just a couple things I'll throw in here. You asked on the roofing side. On the property insurance, it's like a no-brainer. You really have to have that. Couple things to look at in the real world that I've come across is you got to watch your flow down and flow throughs on the contracts that you're signing with this. so that you end up covering the property insurance for everybody who works on the building, including your subcontractors or delivery and all that comes in. You got to be careful on that. That's something you want to look at. And builder's risk, I've used that both ways. I've also purchased that in the past to protect myself on my own project for a minimal amount of money to cover just myself and materials, and it actually paid off more than once. I'm not saying I recommend it for every project or any project for that matter. It's just something to look at. It's more of a risk management statute on your own company. But one thing you want to be careful on builder's risk, again, with the contract, which is where, Jeremy comes in on the legal side, he'll always be able to help you on that, is you got to be careful, again, on builder's risk that is not in there, that you're responsible for paying the premiums and controlling the builder's risk. Because then if something goes wrong, even though you're not technically a holder on it, but you are responsible for it, it can end up coming back against you on the insurance side as well. So these are just a couple things you got to watch out that I've run into over the years.
Yeah, and to add to that, on the legal side in the real world, I've got a client right now in British Columbia who is experiencing a threat from wildfires. So it's all over the news in Canada. They're in the Lower Mainland, and to make a long story short, the owner of the build they're on there has insisted that the contractors have a certain type of insurance that would cover if a wildfire came, but they would pay the premium, the owner would derive the benefit, and there's a lot of arguing over whether or not that's fair, and it's likely going to lead to some form of litigation from what I can tell right now. So, before, we're just at the beginning of this presentation, but I can tell you right now, like, this is something you need to hash out at the beginning of your negotiations, and you always need to read the fine print with where you are covered and where you're not covered with insurance.
For sure.
So, yeah, on that note, we'll move on to the third most common type of insurance in the construction business, commercial general liability insurance. Now, most people have likely heard of this. It's intended to cover contractors against claims for injury or property damage to others arising from your contracting or construction activities. So the triggering event here is usually some sort of accident, including negligence. Negligence would be covered here. So this insurance is not cheap normally. Usually you're covered for three things: property damage, physical injury, or the loss of use of tangible property. And loss of use often isn't covered by property insurance, which is why there's a difference here. Bodily injury and personal injury. So intangible injuries that don't involve physical harm. So coverage is therefore provided for damage to work performed by others during the project, but it will not extend to the insured's own property. So again, back to the exclusions from this type of insurance. The most common ones here is if the loss is the cost of remedying a defect that arises out of faulty design or workmanship, it will not be an occurrence within the terms of the policy. So it won't be covered, in other words. It also doesn't cover damage caused by deliberate actions that are not accidents. Such is the case where damage is done at the discretion of the project engineer, even though the action may be required to remedy a defect in the original work. So other common exclusions here include injuries otherwise covered by workers' comp and liability arising from the use of an automobile and pollution. So the most significant exception to CGL coverage is that it precludes recovery for property damage to the insured's own products, property, and work. The your product exclusion, as it's commonly known, limits recovery for damage to the insured's own products. Generally, anything that is not real property, that is caused by fault or default in the products themselves. Similarly, the owned property exclusion limits recovery for property damage by excluding all property owned by the insured, real property on which the insured is performing operations if the damage arises out of those operations, and property that must be repaired or replaced during the course of the performance of the work, arising from the incorrect performance of the work by the insured. Another common one, environmental liability. A pollution exclusion clause is now a standard clause found in most CGL policies in Canada. Given the prominence placed on the specific terms and phrases in environmental pollution exclusions, special attention should be given to the wording of the policy and exclusions to ensure adequate coverage. Now, when this goes to court, as it often does, they've often noted that if the insurer's intent was to exclude coverage for something specific, then the insurer would specifically state this. All this to say, with commercial general liability insurance, again, you really need to read the fine print. In Canada, these have been litigated more than any other kind of insurance, and in the construction context anyway, obviously not more than personal injury insurance. But you know, these can be quite useful for your construction project, but you really need to be careful. So in conclusion, with CGL, care must really be taken in drafting and agreeing to these provisions, and especially with the environmental pollution.
Yeah, I'll jump on there, give you one. Environmental pollution, that is a great possible rider you may consider, and I'll tell you why. I went, like Jeremy said, it's not included in your general liability. I had a project where this is the most oddest thing I ever dealt with, but this was one of my life experiences that I always love to share, that you never know what's happening in the roofing world. It was a can of cleaner, splice wash for, cleaning seams on a single ply. Storm came up, thunderstorm, blew the can over. It was already on top of something where it shouldn't have been. It always happens. Usually that happens in our fields. Something's not the way it's supposed to be. Flipped over, broke open on the roof, ran down inside the drain. You say, okay, we got contamination into the drainage. No, we were lucky on this one. It was 20 feet, 15 feet from the waterway on the Gulf. Went right out, and this was built prior to the codes. The water actually drained out in the Gulf, got in the waterway. So with this one instance of a gallon or 5-gallon pail, I forget at the time, I had to deal with the local EPA, the Coast Guard, and the federal EPA all in the same thing. Now, that being said, we were able to get it cleaned up, but it sure was nice to know that for a minimal cost, I had this pollution rider on there in case we got there, but we were able to do it. So something to keep in consideration when you're looking at insurance is make sure you meet with your agent, go through it, and know what's covered and not covered. So I'll jump in the next one. It's not always an exciting topic, and most people have this covered, is commercial auto insurance. So you're running a commercial roofing business, you're going to have commercial insurance on your vehicles. Usually you have trucks, but you may have some cars and smaller vehicles. The reason why I brought these up, these are the most common questions that any insurance agent is going to ask their insurance company when they're insuring. Who owns and operates the vehicle? So if the company owns it, your commercial company, you're going to need insurance on it for commercial. How is the vehicle used? So this comes into play again. If you're using it in the business and it's a commercial type business, you will need this type of policy. And also what type of vehicle, because once you get over a certain gross vehicle weight, it's automatically going to fall under here. But here's something I want you to think about. So you probably have yourself covered in your business, but a lot of businesses, let's give you a couple quick scenarios. You may have where you got a foreman that uses his own personal vehicle for whatever reason to do something for you in the company. Now you're not covered. Your insurance is not going to cover him because he's driving his own. And unless they have a commercial policy on their vehicle, which they may or may not, if they're doing something for you in the business in a personal vehicle, they're not going to be covered by their insurance, and they're going to get by, even if it was their fault, it's going to bypass their insurance and it's going to come after you. Now, again, I'm not going to hit the legalities of that because that's why Jeremy's here, and we could probably go into an hour discussion just on that. But I only wanted to bring this up so you think about these things. Same way if you got an estimator, for whatever reason, maybe the company truck was in, have an oil change, you need to go look at a building, He jumps in his own vehicle, says, no problem, I'll hit it on my way to work. That all, besides other implications, that all plays into it. So just kind of give that a thought when you're thinking about your commercial coverage, where you're covered both in your company and who may be driving and saying they're doing work for you. So I guess that will jump over into the next design professionals liability column here, Jeremy.
Yeah, so thanks, John. I wrote a little bit about this before for the CRCA. Again, this may not be as applicable, but I thought we would cover it anyway. So it'd be more for roofing architects, engineers, even some consultants on a project or re-roofing or whatever it is you're doing. Basically, this is for design professionals, as it says, and normally is supposed to cover their negligent acts and, is what we call errors and omissions insurance in a lot of contexts. This would be the exact same thing. So most professionals of this nature would carry professional liability insurance, covers their own practice, their practice policies. But on a larger project, owners may wish to have higher limits of liability than what is generally offered, and may place or require a policy that covers all the design professionals working on the project. Basically, in order for these to be applicable, the mistake or error must be in respect of the performance of a professional service. So in the roofing context, if there is a consultant like an engineer who designs a certain slope to help with, rain runoff or snow runoff or whatever, and then the application of that, design is somehow messed up in its construction. This is extra insurance to cover both the consultant and engineer who came up with the idea and the engineers or the roofers who implemented it. So it can be an errors and omissions coverage for both parties, but normally it would only apply to the professional who may have messed up the design. They don't cover intentional actions such as dishonesty or fraud, of course, nor do they cover extraordinarily risky designs or risky application of designs. And basically, the general idea is they require proof of the professional's failure to meet the standard of care of a reasonable and prudent professional. However, it does not require a standard of perfection, so liability will not necessarily be, concluded in all cases if a professional makes an error in judgment. It's just, if there was, they exclude coverage for claims pursuant to a warranty or guarantee, but if they wouldn't exclude something that was done generally in the thinking that they were doing the right thing or the design would work, and it doesn't, it would cover something like that. So yeah, if you think this might apply to your business, again, reach out to us. It's probably not that applicable for the audience today, but I thought I'd include it anyway.
That was a good one to include, Jeremy. I'll jump in again. I will tell you, when I was on the contracting side, I actually did carry these policies on a yearly basis. They were fairly inexpensive. We weren't the main design professional, so we weren't carrying $10, $20 million worth of this. We'd carry maybe $1 million or $2 million worth of design coverage. And you're going to say, why would we have done that? Well, I'll tell you why. Especially on a re-roof situation, if you pop a proposal out to a client and you're direct contracted with that client, and something does go wrong, or something happens later on, a lawsuit pops up, you technically can fall into that design professional because there was no one between you and the owner, that designed it. There was no architect, there was no consultant. Again, I agree with Jeremy, it's not a huge item, but I will tell you it's one of those risk management reviews when you do every year and you sit down, check it out. It could end up paying. I know it's worked for me in the past. It could end up working for you too. Again, contact Jeremy, contact your insurance professional. It's always worth taking a look at your risk management opportunities.
Agreed. Yeah. So The next one we're going to look at is wrap-up liability insurance. I'll try and get through these a little quicker. Basically, this is an alternative to each party in the pyramid having their own insurance. You would have the owner, GC, subcontractor, and additional insured policies added to the existing policy the owner already may have on the property. So it would cover everyone working on the property. Can be quite expensive. Basically, it helps to lessen the chance of disputes between parties since there is only one insurer for the whole project. In addition, wrap-up liability insurance can lead to premium savings if the policy provides a party, i.e. the engineer, with enough coverage to avoid paying an increased premium on its own policy. So they are placed for the construction period of time, plus several years afterwards, in case issues arise during any warranty period. The advantage of a wrap-up policy is that they tend to have much higher limits. As always, there are exclusions. So who isn't insured here? That's a main question you need to ask. Identification of parties is, covered, generally is defined in the contract, but subcontractors could be defined quite broadly. As a result, despite some individuals being included in the definition of subcontractor, such as those who work off-site, insurers will generally not cover them under a wrap-up policy, which obviously can be very difficult for roofers because often most of the time, I would say you're a subcontractor. Also, damage to the project is normally excluded. So damage that arises to other work on the site as a result of damage done by the insured's own work. So again, as a result, care should be given to assessing wrap-up policies, given the coverage limitation on damage to the work, especially if other subcontractors who the insured doesn't consider to be included commit the damage, then none of that would be covered. So yeah, there's pros and cons to this type of insurance. This one in particular, you need to be really careful how you define everyone in the pyramid, how they're going to be viewed. So if you're a roofer and you're just doing a little work off-site and you're not covered by this policy and you don't even know it, it can be problematic for you going forward. I'm not sure what happened to John there, but I will carry on anyway. Okay, so sorry guys, I'm not sure what's happening here. Okay, I'm not really sure what's happening. Anyway, I will carry on. I hope everyone can still see me. Okay. All right, oh wait, are you back?
I think I'm coming back. I'm not sure what happened there.
That's all right.
You have
yeah,
the slides up? Sorry about that.
I was just mumbling away to the crowd here. It's okay. we're all working from home. It's fine. All right, so we
Slides
were
up.
at,
I can't.
I think I can get the slides going. I'm trying to share my screen. Okay. So let me see here. Wait, is this me or is this you, John?
Oh no, I'm trying to get us back up here.
All right.
Wonderful
Well,
world.
we almost made it through the types of insurance. Stay tuned for the CCDC update. Don't go anywhere.
All right, we did wrap up.
All
Can you
right.
see my screen now?
Yeah, I can. I assume everyone can.
All right, sorry about that, everybody.
That's okay. That's okay. All right. So Subguard
I think we're up to.
Insurance.
I think we're up to the COVID, correct? Or did we do Subguard?
Oh yeah. Again, Subguard Insurance. It's just for subs who default basically. So that's more applicable to general contractors. So again, yeah, just quickly in a nutshell, if you're operating as a general contractor in the roofing business, this might be a good type of insurance to hedge your project in case a subcontractor you have helping you out ends up defaulting in their business and can continue. And obviously, there are a lot of ramifications that could snowball from that. So this type of insurance would cover the downstream losses from that kind of an event occurring. Again, kind of a niche insurance. If you know who you're working with well, then it shouldn't be necessary. But again, since in this webinar we're advocating for smart insurance practices, I don't want to tell anyone not to get it. But if you think you need it, the main takeaway may be find a better sub. Yeah, so that's how Subguard Insurance works. So yeah, the next one we were going to talk about COVID and business interruption insurance. So this is highly applicable to life right now. I mean, before this webinar started, I was just chatting with John about what's going on in Florida, and anyone who watches the news can see that COVID's coming back right across the states. And we keep thinking this thing is over, and maybe we're just getting crazy or something. But the main thing here is that given what's happened in the last year and a half, I think it's smart for people in not just retail or restaurants or the industry's airlines, the industry's most affected by COVID, but even the construction sector. Obviously, we were pretty blessed in Canada and in Ontario in particular, where everything was shut down except construction for things to continue. But people still lost money, and there were still lots of delay claims, and there were still shutdowns in various aspects of the sector and the economy. And I don't think it's a bad idea for the CRCA members and for anyone listening to this webinar to consider going into the fall and winter buying business interruption insurance. Like any other type of insurance, read the fine print. But I mean, even in the jurisdictions where people didn't really, where they didn't shut down a whole lot, I mean, projects are still faltering because so many people are getting COVID and people are sick. So I don't know if you want to weigh in on this, John, but I think that this is probably a smart call for a lot of contractors to buy.
Yeah, again, you got to weigh out the price of what it is, but personally, I don't think, and I'm agreeing with a lot of so-called experts, COVID is not going to go away anytime soon. Vaccines are there. We're going to do the best, but I think it's going to end up moving from the pandemic situation into an endemic, which basically means it's going to be there kind of like the flu every year with shots and work around it. So again, this could be very good to protect you against these unscheduled shutdowns, because the strange thing about COVID, it seems to move in waves to different areas and different locations. So it's very hard to know where it's going to hit. So I think it's definitely worth looking into.
Yeah, that's all I'll say about that. Anyone who wants to chat with us more about that kind of insurance, please reach out. But I mean, it's certainly going not going away. Anyway, okay, so we talked about this a little at the beginning. So subrogation in a nutshell is basically when an insured's policy is paid out by the insurance company. So basically what happens is the insurance company takes carriage of the loss, and they own the loss now. So, you know, in layman's terms, or just to use an example, like in a car accident, if you rear end someone, you know, the insurance, or if you get rear-ended, the insurance company may pay out a settlement to you, right? Because you're hurt or whatever. The person behind you, if they're not insured, the insurance company that paid you your money because you got hit by them can now sue that person individually. If they are insured, which they should be if they're driving, then they will sue their insurance company. The same thing can happen in construction. So if a homeowner, you know, has homeowners insurance that happens to cover minor repairs or major repairs, whatever, and the contractor screws something up, you know, whether by negligence or a concealed condition, there's any number of ways this can happen. It's infinite. And then the insurance company takes carriage and ownership of the claim, pays the homeowner. Well, they're going to want their money back somehow. That's how they stay in business. They're going to figure out or try to figure out what went wrong and sue you, the contractor, for what you did. Now, just like in the car example, if you are insured using, and you know, I commonly would say property insurance is the one that would be most effective in protecting you here. But all the insurance we talked about in the previous slides, they can all be useful in subrogation claims. So subrogation, it's something that, you know, can pop out of nowhere and years down the line, and you may not be expecting it. So the adequacy of your insurance and the length of time to which it applies is very important in protecting yourself against subrogated claims. John, I think you had something you wanted to weigh in on here.
Yeah, I mean, I've seen subrogation happen a lot on job sites, especially in the commercial side. And again, you got to go back into your contract to make sure you're not signing any clauses that cuts any of your rights away as far as a subrogated loss, because you know, look, it's the way life is. Everybody wants to recoup their money, and insurance companies are no different. They're going to go after whoever they can to recoup whatever loss they have. So I definitely want to, you know, see you be careful on that and keep a wide open rule. And again, I guess we got on here, we have standard operating procedures, documentation, and QC program. So I'll kind of hit on this a little bit while we're on here, and then Jeremy, jump in anything I may have missed.
Sure.
If you listen to me and you've read anything I've done, or you know me, you know, the 45 years that I've been on the construction side and now working with contractors, I'm a proponent of standard operating procedures. SOP works. It should be no different than in your insurance part of your company too. You need to know what you're purchasing, what you're getting, how it works. Your operational staff should also understand what's covered and not covered in insurance. The best way I've always found to avoid anything is to actually have a procedure in place and know that your people that are operating in the field know what to do. So what do I mean by this? To kind of put it in a simple nutshell is ultimately somewhere along the line, you're going to have a claim, you're going to have a loss, there's going to be damage. It happens. It's roofing, or it's a high risk business. But if you have a procedure in place and everyone knows from the roofer all the way up to key management, what happens if there's a flood in the building? What happens if there's a fire? What happens if there's an injury, and so on and so forth, right? If you have these procedures keyed when you notify what you need to do, who's the next in line. It's going to save you a lot in the long run. The next thing to jump into is documentation. You've heard us at Kenney and myself, I did the same thing on that sign. Whoever has the best paper wins, or the best digital world wins. Well, that starts right out in the field, right with the companies themselves. You want to have part of your operating procedures, what photos you're taking, how you're documenting what went on, how you're documenting how you reported the loss, all things like that. QC program, again, this goes back to we're talking about the E&O and all the different insurances prior that kick in. Nothing will keep you more out of problems in the insurance world, in the deductible world, and the roofing world in general, is to put a good QC solid program together with inside your company, that somebody is overseeing quality just the way they're overseeing safety, right? That's what's going to really make a difference, and it'll cut down on your claims loss. I used the QC policy for many years. It was written, it was solid, people were trained on it. We showed how we graded our roofs, we showed how we graded our folks. We were able to get a deduction on our insurance premiums based upon having this QC program in place. So again, I know it's a little bit off topic what we're talking about, but we want to also talk about keeping our premiums down. So that's what I'm going to say. So prevent your losses, keep your premiums down, follow procedures, document, and have a QC program. So that's what I'll jump in and add on that there, Jeremy.
Okay. Yeah. Yeah, that sounds good to me. I don't really have anything further to add other than,
Okay.
you know, your additions there make sense, and having your ducks in a row documentation wise, any lawyer would agree with you there. That's for sure. Okay, so I know not everybody uses the CCDC documents, but in Canada, as we know, when they make an update, everyone sort of pays attention, and you know, they are more commonly used than any other contract type. So we felt like we should include their latest insurance update. So insurance coverage, for anyone who's been paying attention to their latest iteration, the ready for takeover date is now where the insurance ends rather than the substantial performance of work. So ready for takeover basically is just a term that means, you know, the project can be handed off even if there isn't substantial performance. So if you need more information about how CCDC is defining ready for takeover versus substantial performance, reach out to me. I'll happily explain it. It's not really the point of this webinar, so I won't go too far into it. And then the crucial thing that I wanted to highlight is the increase in coverage. Now, I know that the OIRCA has issued guidance to its members that if you're in the GTA, you need to have your minimum insurance up to 10 million now, rather than, you know, to be in compliance, I guess, with CCDC. I think their guidance, and I might get emails about this after, but I think their guidance still is for outside the GTA, you have a longer period of time to get your insurance up to 10 million. I would say do it sooner than later. It's coming anyway, but that's what the standard CCDC document has in there now, and that it's irrelevant to those documents where you are in Ontario or the country. So follow the OIRCA guidelines, but you know, if you're gonna have to go to 10 million soon anyway, I would probably get there sooner than later. And then finally, they introduced a new category for contractors' pollution liability insurance. So minimum coverage there is 5 million per occurrence for bodily injury, death, and damage to property. I know the CCDC documents, you know, they can be a little unwieldy. And if anyone wants more information on this stuff, feel free to reach out. Not a problem.
So,
John, this is all you.
Yeah, safety practices for roofing torch use. We wanted to cover a little bit about this, you know, using torch still using torch and roofing. It's very popular. I don't believe it's going to go away, even though we're trying to move that way. But it's like anything else, everything takes time. So this is also, something you need to think about. It's proper pre-job planning. And I know if you're using a torch, you should, be properly trained in it. We're going to make that assumption. But you want to go up and have, your pre-job planning, before you even light that torch and get on a job, including things like what is there that's flammable. We can make sure we don't torch over flammable, to make sure there's no hidden areas where the torch can go up underneath a parapet or in through a unit or so forth like that. These are things you want to have pre-planned out. Make sure there's no flammable items that you're torching over, such as decking or insulations, etc. And then, of course, torching safety. Again, it comes down to having the right amount of fire extinguishers on the job site. Again, we could spend an hour just on this webinar itself. I just want to touch these briefly. Make sure you have the safety in place, somebody that is designated to keep an eye on the roof. This is besides a fire watch. We'll get into that in a minute. But there again, what are you torching? Where's the torch? I've seen people burn other people on the roof by swinging the torch around and not paying attention. So it's more than just, burning a building down and protecting your liability. But again, on the insurance side, you got to be careful and make sure you're covered for doing these type of operations. So check on that. Jeremy can help you with that, of course. And then most importantly is a fire watch. Anytime that you're using a torch on any building, I don't care even if you're just up there drying water. I've seen that done. You should have somebody on a fire watch. And if you're torching for the day and the day's over, an hour to 2 hours, depending on the guidelines that you're in, you want to stop torching before someone leaves the job, or you have to leave somebody there. And it's not only checking the outside of the building. Somebody should be checking the inside, do your temperatures, your infrareds, studies, and that. So again, if you're using torching, as far as your insurance go, you got to have this all in, again, documentation. You need to have it documented so nothing comes back on you if there ever is a claim or there's a problem, that you have a proper pre-job planning process, a proper torching safety plan in place, and you have a fire watch and how you do it. So that's really all I wanted to cover on that today, is just throw those couple of tidbits out there. Again, it's all about. So I guess that brings us up to our conclusion. So Jeremy, why don't you bring us home?
No problem, John. So yeah, again, I've harped on this from the get-go, and insurance to me, I don't know why it's been on my mind so much this year, but just wanted to get this webinar out. And the main conclusion that I've been writing about and what we've been talking about today is over-insuring is better than under-insuring. We deal with so much litigation with insurance companies, and people are mostly underinsured, I would say, that I've dealt with, and it can really lead to a lot of problems. And I know it's one of those things, it won't happen to me. It's not the right attitude to take. I mean, that's just the main takeaway. Point number one: over-insuring is better than under-insuring. Better safe than sorry. Subrogated claims, very insidious. They can come out of nowhere. Again, it's just like conclusion 1A is subrogation stems from that. If you're overinsured, you don't need to worry about it, because chances are, or most likely, you will be covered from a subrogated claim. CCDC documents, again, they drive the industry contract-wise. So $10 million minimum for certain types of coverage. So if you're using these documents, you need to be cognizant of that. You're literally in breach of the agreement if you don't have $10 million worth of coverage. So you definitely need to be wary of that. And yeah, that's about it. Again, if you want, oh, sorry, John, go ahead.
No, I just wanted to add in, you brought up a good point about, having more insurance is better than less insurance. The only tip I'll throw in there, as chief operating officer of a roofing company, I always wanted to be involved in this process every year with my agent and with my team. You want to not only check what your insurance limits are, right? You need to verify what your deductibles are. How many, what's is there a lifetime cap? Is it per incident? You need to know these things. And also, too, when you check it out, you want to make sure what your exclusions are. So the reason why I'm saying that, you can think, you have a lot of insurance and you're well covered until that claim comes in or someone files that lawsuit that you weren't expecting, then that is not the time where you want to find out really what your coverage is and is not. So again, I want to go back to, and again, we'll probably do a webinar on that, I would say here this year, on risk management, if not with the beginning of next year. But that is a really important process for any company, and especially roofing companies that follow on a yearly basis, and insurance coverage and what you're not covered for and where your black holes lie. That is a huge part of protecting yourself in that process.
Definitely, definitely. And thanks for adding that in, John. I mean,
Sure.
it is all, it's all encompassing of risk management for sure. So
I guess we'll find out if we have any before we get into closing out here. And again, I apologize for the technical difficulty, but I guess that kind of puts the real life into it. You can see these are live and on the spot, so I think we recovered fairly well. I apologize for dropping off for a minute or so, but technology is what it is in this world. Do we have any questions that have come in our way?
do we need to unmute the attendees though?
I believe they
Yeah.
should be able to put these questions in through the message box. I don't see any. If somebody has a question, please type them into the messages.
And if you don't, this is pretty Canadian centric, obviously.
Yes,
So
we do have two. Anna, yes, please jump in and read them for us.
okay.
All right, I'm in. Let's see. All right, so the first question is, how would project-specific risk differ from general liability?
In project-specific risks differ from general liability. It depends which type of coverage. Okay, so to answer from a legal perspective, general liability would have way more exclusions. So if you have project-specific risks that aren't named in the coverage, then they could be excluded. So if there's something, when you're negotiating your insurance policy for some, and you know, it sounds like whoever asked this had something specific in mind. If there are certain risks inherent in what you're doing, you need to make sure they're covered. They are written down in the policy. General liability always will be riddled with exclusions, and you can assume that the project-specific risk that you have in mind will be one of them. It might not be. I'm just saying it's better to safely assume that it won't be covered. So to quickly answer, if there is some sort of specific risk that you have in mind, you're going to want to have that in writing in your policy, whatever the type of insurance it is.
Yeah, the only thing I can jump and add on to that is I will tell you from my experience, I found a lot of projects had more specific project risk than what your policy actually covered. Well, I always pick that up in the early stages when you're doing contract reviews prior to, hopefully, even if your estimating team reviews that in. For example, maybe you don't have a pollution rider and that one requires it. There's just things in there that could end up costing you a lot of money that you didn't plan on. And unfortunately, once you do sign that contract, if you haven't picked up at that point, it's going to be over on you to deal with. So I have seen that. I, again, recommend that you do that risk management before you sign and find out what specifically is on that project requirement. Sometimes they're not. Sometimes your insurance is good. But especially if you're doing new construction, larger GC work, you're usually going to find there's a lot more job-specific issues that come up.
Yeah.
All right, so there's two more. This one might be more of a comment. I don't know if you guys can kind of comment off of it. It says design build contracts require professional liability insurance. Some roofers sign design build contracts.
Yeah, I mean, I'll take it first. That kind of jumps back to what I said before. If you better have that insurance, especially if you're signing a design build contract. But again, it falls into if you are directly involved in recommending, which is considered designing a roof system for even a re-roof situation direct to owner, you may want to consider carrying that insurance on a regular yearly basis. I know it was, in comparison to carrying an overall insurance package, it was fairly cheap in comparison. So I'll just put it that way. Nothing's cheap, nothing's cheap. It's very inexpensive than others. But so yeah, Jeremy, I'll let you hit on the legal side, but I would say from the common sense business side, if you're signing that, you best have that insurance.
Definitely, yeah. I mean, the common sense and the legal intersect there entirely. Yeah, I mean, if you are signing one of those types of contracts, then yes, you should have design build insurance. And again, I guess we touched on design professionals liability insurance earlier in the presentation, and maybe I out of hand dismissed it as not being as applicable as it really is. And that was just because I think a lot of roofers are often re-roofing at the direction of someone or another GC who may have done the designing. But if you're the one who's actually doing the design build and you're in charge of that, then of course, yes, you should sign or you should acquire that type of insurance. Yes.
All right, we have one more. What's the difference between installation floater on a CGL and all risk insurance for a roofing contractor?
Sorry, can you repeat the first part of that?
Yeah, what is the difference between installation floater on a CGL and then an all risk insurance for a roofing contractor?
So all risk versus an installation floater. I guess it would boil down to the language in the rest of those contracts. I mean, if they're on a commercial general liability insurance contract, if they make installation floater, would that be the same as like rider, John? Same type of thing?
I'm going to make the assumption, I don't have enough information based on that, but it does sound that way.
I haven't heard that term used as often as rider, but I'm going to assume that's what it means. It would be very similar. I don't want to give a concrete answer to take to the bank on this, but it would be similar, and all risk insurance and commercial general liability insurance would have a lot of overlap. So if there's an installation rider on a CGL contract, I think the main difference there would be that it's specifically mentioned in the commercial general liability insurance, so you're good. Whereas if you're going with all risk insurance, insurance companies are tricky and they may try and find a way to weasel their way out of paying for an installation screw up in all risk insurance. So they may say all risks subject to the exclusion that the installation was done correctly by manufacturer's directions, and then you can get excluded if for whatever reason you can't do that for practical reasons, right? So an installation rider on CGL would account for the installation no matter what the manufacturer says you have to install it in a certain way, whereas all risk insurance, and again, I'm just giving an example here, in a worst case scenario, all risk insurance may say, oh, well, the practical implications be damned. You didn't install this the way that the insurance policy wanted it to be installed or called for it to be installed. Therefore, we're not going to cover it. So I think if you're going to compare the two, it would probably be better to have the installation rider on the CGL versus assuming you'll be covered on an all risks policy.
Yeah, the only thing I can add on to that is, again, read it. I can take that a couple ways without knowing the specific instance of why it was asked. But I've seen an installation, clause can also exclude any damage due to your faulty installation. So that would be a very bad negative towards the roofing contractor. Usually the way they're written, either way, you're not going to recover your loss. So if your crew made a mistake putting the roof down and it got in and got your insulation wet, and there was some damage to the roof, to the building, let's say, if you were covered with your installation, they would cover the building damage, but they would not give you any money towards replacing your products and materials. That would have to fall. That usually is a rider that falls under the professional liability. You can get off of that, where it'll be a replacement value type insurance. So again, that's the only thing I can add into that. Yeah, I'd have to read the clause how it was, but I would say look at it that way, that whether it's an exclusion or an add, that will make a big difference.
Yeah, it boils down to specifics for sure. I mean, same here, John. I tried to give as general a comparison as I could.
That's the only thing I could throw in on that. Hopefully that gave you, whoever asked the question, a little bit to go with. Again, once you read it, or if you have any specifics, get it over to Jeremy. He'd be happy to take a look at it.
That's why I put my email. That's why my email's there. I figured everyone's in Canada, so you can get right to me down there, or you can call me. The 416 is my number, so feel free.
Is that all we have, Anna, on questions?
Yep, that's it.
All right, we're almost at time. So Jeremy, why don't you just give your contact information one more time for everybody?
Yeah, sure. So first of all, thanks everyone for viewing our webinar today. My cell is 416-889-8738. Available anytime. You can leave me a message, shoot me a text. It's all good. My email, jpower@cottoneycl.com. If you want to see some of the pieces we put together on insurance, we've got our whole series up there on cottony.ca. And then if you want to check out some of the stuff we're doing south of the border, you can go to cottoneycl.com. And we look forward to hearing from you.
Yep, if you ever need to get a hold of me directly, feel free. You can get me at jkenney, that's JKENNEY at cottoneycl.com. But as always, reach out to Jeremy. We tag team a lot of calls up there together. We're always here to help you out in anything you need.
Yeah.
So that being said, I want to thank everybody for joining us today, and we'll bring this to a close.
Thanks, everybody.